Something big is happening quietly behind the scenes in Canada's financial system, and most people don't even know it. It's not a tax hike or a new CRA rule. It's a massive anti-money laundering crackdown that's flagging ordinary Canadians like potential criminals, often without them realizing it. Let's break it down. Over the past year, Canada has rolled out one of the most aggressive AML enforcement pushes in decades. After years of criticism from global watchdogs like the Financial Action Task Force, the federal government is under pressure to prove it's taking dirty money seriously. So what does that mean for you? Banks, credit unions, and even payment apps are now required to report and monitor far more activity than before. Every deposit, transfer, and e-transfer you make could be reviewed, flagged, or stored in FINTRAC's national database, even if you've done nothing wrong. Here's how it works. If you deposit or withdraw $10,000 or more in cash, your bank automatically reports it. That's not new. What is new is how aggressively smaller transactions are being tracked. A pattern of smaller transfers, say $2,000 every week, can now trigger what's called a suspicious transaction report. You'll never be told. The report goes straight to FINTRAC, Canada's financial intelligence agency, and from there, it can be shared with the CRA, RCMP, or even international agencies. And it's not just cash. Large crypto transactions, real estate deals, luxury purchases, and even prepaid card loads are now under the same microscope. FINTRAC logged over 31 million transactions last year, a record high, and experts say 2025 could surpass that easily. Here's the twist. You don't need to be laundering money to get flagged. You could simply be moving money between your own accounts, sending e-transfers for side hustle income, or repaying a family member. The system doesn't judge intent, it just sees numbers and patterns. So why is the government doing this now? Two reasons. First, Canada's been labelled a soft target for money laundering, especially through real estate in BC and Ontario. Second, Ottawa wants to align with US and EU standards, where financial surveillance has been expanding for years. But the side effect is serious. Everyday Canadians are being monitored like never before. So what can you do? Number 1, keep clean records. Always document where your money came from, especially if you move large sums between accounts. Number 2, avoid cash-heavy transactions unless necessary. Cash is what raises the most suspicion. Number 3, be cautious with crypto. Exchanges now report directly to FINTRAC, and frequent transfers can raise questions fast. And number 4, don't ignore strange bank requests. If your bank asks for updated ID, proof of income, or transaction details, it's not optional. They're complying with federal AML rules. The truth is, the crackdown isn't just about billion-dollar laundering schemes. It's about building a massive data trail, and ordinary people are caught in it. So if you've noticed your bank asking more questions lately, or your transactions taking longer to clear, now you know why. Stay alert, stay transparent, and make sure the money you move doesn't move you into a government database. Subscribe if you want updates that actually explain what's really going on with your money in Canada, because this story is only getting bigger.